Hey everybody, it's John, your personal tax consultant with a degree in accounting. So you have a vehicle that you drive for work, and you want to deduct the miles that you've been driving. Well, there are areas within the tax return where you can do this, but you want to be careful, because this is a potential red flag area for the IRS. So don't over-deduct your miles. The first thing you need to figure out is which miles you're driving are deductible. You can't deduct personal miles, you can't deduct commuting miles, which would include driving to and from a normal workplace, which if you're self-employed may change from time to time depending on the project. You should only deduct those miles driven outside the normal work driving and commuting. Once you've figured out the number of miles you can deduct, you're going to apply the standard mileage rate to that number. What you come up with is the amount that you can deduct. If you're self-employed, you can deduct this amount on Schedule C. You'll also find a worksheet on the back of Schedule C to help you figure out what your mileage deduction is. If you're not self-employed, you may be able to use this deduction as an itemized deduction. And remember, for all the mileage you're deducting, you should have a written record of where you drove, how far it was, and how it was related to your business. Another potential red flag item is the business use of a home deduction. Now you are allowed to use your home for business purposes, and you are allowed to deduct the portion of that house that you use for business. However, in order to qualify for the deduction, that portion of the house must be used strictly and solely for business. Now the deduction is taken as a percentage of the total square foot of the house. An example, say you have a 1,000 square foot home and your home office is 100 square feet. The 100 feet represent 10% of that home. Therefore, you may be able to deduct 10% of associated costs for your home. Some examples are utilities, mortgage, property taxes. And a final red flag item is clothing deduction. Now the IRS looks at this a lot because it's often abused. In order to deduct clothes for work purposes, those clothes must be specific uniforms used solely for work purposes, and they must not be suitable for street wear. An example for you. Let's take a nurse. Nurse goes out and buys scrubs or whatever nurse outfit that he or she needs for their everyday work. Those clothes, a uniform, are deductible. Now let's say the nurse has an important meeting to go to and must be in formal business wear. So the nurse goes out and buys a suit. This suit, although purchased for a business purpose, can also be worn outside of business as everyday streetwear. For all three of these potential red flag areas, use discretion when utilizing the deductions. And hopefully you can avoid a headache of an audit later. Thanks for watching. For other tax-related videos, feel free to follow the link below or any of the links above. And be sure to rate, comment, and subscribe to our channel. If you have any requests or suggestions, send us an email to requests@mahalo.com. Thanks.